Hello everyone, my name is Nishant Verma and I am going to present to you Axis Bank case study. So let's start with about the company. So Axis Bank is the third largest private sector bank in India. The bank offers the entire spectrum of financial services to customer segments, covering large and mid corporates, MSME, and retail businesses. At present, it has a total of 4,750 branches and 16,900 plus ATMs and cash deposit and withdrawal machines and 145 plus SME centers. Retail loan accounts for 57% of the bank's loan book, whereas corporate and MSME loans account for the rest 43%. The retail segment has increased its share from 41% in financial year 2016 to 57% in financial year 2022. So this was about the company. Now let's see the key ratios. So over here, capital adequacy ratio is around 18.54%. So this is a good ratio, like for banks, if it is around 20%. So this is a good amount. Net margin, net interest margin. So this is the, which accounts for the bank's profit. Like they will be taking loans from RBI and giving to the, public. So whatever is the more the difference, I mean, the bigger this value, the more profitable the company will be. So coming to the gross NPA, NPA is non-performing assets. So like if someone has taken loan from the bank and they are not repaying it, so that will become, NPA. Like if they don't pay anything for more than 6 months, so it will go into their books as NPA, non-performing asset. So this is gross NPA. This is around 2.82%. So anything less than 5% is good. So this is good. And after that, net NPA. So difference is like gross NPA is like whatever is gross. So they have something to adjust this. Like every year when they see their books, so they fix some amount, like this could be the default. So if you minus that from the gross NPA, so you will be getting that net NPA. So net NPA is 0.73%. This is also good. And CASA ratio is, current account savings account ratio. So this is 45%. This is also good, if because see, in savings account they have to pay to the people who have this savings account in their bank, so they'll be paying interest, but for the current account they don't need to pay any interest. So the ratio is 45%, so this is good enough. So coming to the approach which we will be taking for doing the case study. So basically there are two kind of analysis which we are going to do, that is fundamental analysis and technical analysis. So in the quantitative analysis we are going to cover market cap, book value, and PE ratio, DE ratio, and dividend. And there are more ratios also. So apart from that, in the qualitative analysis, we are going to discuss the promoter holdings and the quality of top management. So these things over there. Coming to the technical analysis, we'll do trend analysis, whether the stock is in uptrend or downtrend, and entry level, which would be good price to enter and why. So let's jump to quantitative analysis. So as we can see over here, market cap is once tens, 100,000, 10,000 lakhs. So this is around 2.5 lakh crores. So this is a big market cap. And after that, the price is around 865 right now. and book value is 385. So current, price to book value is around 2. So this is also not bad. This is really good. Like if price is around 2 times the book value, so this is not very overpriced. Coming to the high and lows, for the year. So this year it went, I mean 970. So this is for the last year, that is financial year 2022-23. So it went to 970 and the low is 618 and current price is 865. So yeah, I mean it has corrected somewhat, but the downside is not very much from here. As you can see, debt to equity is 8.64. So this is alarming, because the company has taken large amount of debt over here. So this is not a good sign. And coming to the EPS is earning per share. So this is around 67, and PE ratio is 12.9. So this is a good thing, because if PE is more, then you are paying, uh, more price for that earning. Like if PE ratio is 12.9, so it's around 13. So we can say that you are paying 13 rupees for every 1 rupee earning. So yeah, so PE ratio is, definitely this is good. And coming to the dividend yield, so dividend is not that attractive. It's 0.12%. So dividend is not good. Yeah. So ROE is return on equity 12.7%. So yeah, for a company like Axis Bank, this is not good. It should be around 15%. So yeah, so this is average. Coming to the qualitative analysis, so we have over here, holdings data. So the promoter holding has been decreasing, as we can see here. It was, in the March quarter around 16%. So within, around 2 years, it has come down to 8%. So this is really not a good sign. Apart from that, the good part is FIIs and DIIs have around 80% holdings. As you can see here, if we, add FIIs and DIIs holding overall, every quarter, so it comes around 80%. So this is a good sign, because foreign institutional investors and DIIs, they are, interested in the bank. So this is a good sign. So we need to further see the quality of top management. We need to be certain that the top officials do not have any fraud or laundering case against them in the past. Also, we need to be sure that they have good background professionally over decades, not 1 or 2 years or 5 years. We have to see their long term, how they are doing professionally. So you can check, who is current MD or who is CEO, everything. You need to go to the official website of Axis Bank to check, annual reports, or else you can Google it like Axis Bank annual report 2022, like that. So you'll be getting it definitely. So let's jump to technical analysis now. The stock has been in long-term uptrend. As you can see here, see the stock has been going up and up and up consistently over the years. So this is data from around 2005. So you can see continuously the stock is going up and up and up. Hence, good to buy, definitely. Also, there is a major support around 800 price level. You can see over here, like consistently in the year 2019, it made a high over here 800, then again it tried to break this level around 2021. Three times it tried, and finally uh, in mid 2022 it broke this 800 level, and currently it's around 850 levels right now. So yeah, so there is a major support around, because previously it was resistance, so it should become support now. So there is a good support around 800 price level. The PE is around 13 now. So if the price goes around 800 rupees, or the PE becomes 10, we can consider this for long term. So it would be a good buy. So thank you guys for listening to me, and hope that I explained everything pretty well. And this was case study from my side. Thank you guys for listening to me, and have an awesome day ahead. Thank you so much.